What is the best stablecoin in the market? Stablecoins such as Tether have been at the forefront of crypto market news. Legislators in various countries, including the United States, have expressed concern about the effects of these cryptocurrencies on the state of their financial systems. In this video, we'll be explaining the three companies that issue salable stablecoins and their financial support, so stay till the end. Hey everybody, welcome to the Crypto HODL Club, where you can learn and always stay up to date with the cryptocurrency market. If you're new here, be sure to subscribe and hit the bell button so you don't miss any of our awesome videos. Today, most cryptocurrency trading is based on Tether, which is the largest and most widely used stablecoin on the market. All market participants need to know about the backing of stablecoins and what impact the limitations of stablecoins have on the crypto market. So if you're planning to operate in the crypto market, don't miss this video. By the way, Binance is the safest and best exchange for buying and selling crypto. We recommend that you use the link in the description to register in Binance and get a 10% discount on all of your commissions. First of all, let's look at the definition of stablecoin. Any cryptocurrency designed to have a relatively stable price, typically through being pegged to a commodity or currency or having its supply regulated by an algorithm. Each stablecoin has a specific backing. For example, Tether is backed by the US dollar, and the value of Tether is equal to the US dollar. Of course, various countries, including El Salvador, intend to issue their own stablecoins and change their financial system. But why stablecoins and not other cryptocurrencies? First goal is for traders and investors, after a period when they are waiting to exit the market or take their profits out of the market, had to transfer their current assets to a site that exchanges cryptocurrencies against fiat currencies, such as the dollar and euros. This cost a lot of money and was not cost-effective. This is where creating stablecoins came in to help. Another and perhaps more important goal for governments to create stablecoins is that these cryptocurrencies fluctuate less than other cryptocurrencies. And if a country's financial system is dependent on a volatile cryptocurrency, many problems will naturally arise. In general, based on the backings that we mentioned, there are three types of stablecoins. Stablecoins backed by fiat currencies, stablecoins backed by cryptocurrencies, and the last one, algorithmic stablecoins. When the market moves up or down, the price of stablecoins may fluctuate as well. The companies that issue these coins have to solve this problem by adjusting the ratio of supply and demand. Algorithmic stablecoins are cryptocurrencies that use a special algorithm to regulate supply and demand until their price does not fluctuate much. When demand increases, more tokens from the cryptocurrency reserves enter the market according to the algorithm so that there's no shortage. When there is a large supply, this algorithm will repurchase the tokens. These stablecoins include Ample Force or AMPL, which is dependent on the US dollar, but its price has risen to $3 over a while. These stablecoins are a new phenomenon and are less stable than other stablecoins. The other category of stablecoins are those backed by another cryptocurrency. The most famous example of this category is DAI Crypto, which is an Ethereum-based token. DAI was built on the Ethereum blockchain using a smart contract. Unlike Tether, no centralized institution backs the value of DAI, and no traditional bank backs it in real dollars. DAI is like getting a loan for Ethereum value, and anyone can produce DAI. All you need is Ether and technical knowledge on how to use the decentralized program. The way to keep the price of DAI constant is by adjusting supply and demand by rewarding it. But stablecoins that are backed by fiat currencies, to maintain their value, the company that issued them must have the same amount of fiat currency in one bank account. Fiat's most important currency that supports the stables is the US dollar. These cryptocurrencies were not very transparent about the status of their backers, and this led various stablecoins to claim and compete by claiming that the number of dollars they backed was higher than others. Recently, three large stablecoin markets released information about their support, so let's review. The USDT, or Tether, is provided by Bitfinex Exchange in Hong Kong, and depending on the network, we have different types of Tether. The first Tether offered on the Omni layer in the Bitcoin blockchain. Today, Tether is also available on various blockchains, including Tether, Theron, and AES. Tether's backed, according to its official website, 76% includes liquidity and short-term deposits and securities, the majority of which 76% in the form of securities. The remaining 24% also includes precious metals, bonds and loans, and other investments. USDC or USD coin is the second largest stablecoin on the market offered by Circle in the United States and is the main stablecoin used in the Coinbase exchange. 61% of these cryptocurrencies are backed by cash and cash equivalents, 13% by certificates of deposit, 12% by the US Treasury, 9% by securities, and 5% by bonds. BUSD, or Binance USD, is the third largest stablecoin on the market and was issued by Paxos in the United States in collaboration with Binance Exchange. The interesting fact about this stablecoin is that 96% of its backing is liquidity. But a closer look at these sources reveals that the mainstays of stablecoins are debt and loans. The companies that we mentioned make money for themselves by lending and taking out loan interest. If we make a comparison between these three cryptocurrencies, BUSD has a larger share of loans, and these loans, or so-called debts, are easily collectible, and therefore the situation of BUSD is better than its two counterparts. Securities are the stock exchanges that are not considered a very safe investment, and as we said, the bulk of Tether's backing is securities. In the case of the USDC, except for 61% liquidity, the remaining 39% is not easily recoverable, and this is an important weakness for this stablecoin. In none of the cases, governments have not had a role. The simplest reason is that a significant portion of government bonds are held by these companies. In general, to make sure you invest in credible cryptocurrencies that are not going to end up a scam, we recommend you use a credible exchange like Binance or Coinbase. We have links for both in the description where you can get lots of bonuses using our link. If you liked today's video, be sure to like and subscribe if you haven't already, and let us know down in the comments if there's any subject you want us to cover in our future videos. See you in the next video.